Hello, Bay Area. I'm Nagaraj Annaiah, the Bay Area Realtor. Today, you're listening to Real Estate Show, and I'm joined by April L, the fantastic lender, where we are going to talk about completely about mortgage today and how the mortgage is impacting our Bay Area real estate. Hello, April. Welcome to the show.
Thank you, Nagaraj.
Yeah. So, April, to start with the question, right? Like, how are the tech layoffs, recent layoffs, and the stock market is so volatile. Sometimes it's going too high, and sometimes it's changing a lot. How are the basically mortgage rates doing nowadays?
Mortgage rates that were at the best levels since January 2024. So mortgage rates have been just doing extremely well of late.
Mhm. And that's great to know. It's the best from last January 2024. But how are the rates compared, like how are the current rates today?
So current interest rates, today we're seeing 30-year fixed with 0 points at 6.625, which is a um, huge drop
Mhm.
since the past. And then we also have the ARM loans down to low sixes. So we're at about 6.25% with 0 points on a 5.5 ARM.
So let me repeat, it's a 6.625 for a 30-year fixed, 6.625 for 30-year fixed, and 6.25 for a 5-year arms. And what is this annual? Basically, it's an APR or it's basically ends with an APR, right? Annual percentage rate.
It's actually the note rate. Annual percentage rate typically takes into account closing costs, so we don't usually rely on that factor too much,
Uh-huh.
just based on the note rate of the loan.
Okay. So, but one important thing to consider, right? Everybody knows this is going to be an election year, okay? And people are talking about Trump re-electing in 2024 again back. It's a second term, going to be a second term, the way the trends are going on. So we're just going based on the trends now. What are you going to see the rates would be like for going to the end with the 2024 and starting with the 2025? How are the rate you think going to be?
Well, starting with just the economic news that the Fed is planning to do rate drops in September,
Mhm,
that actually is currently already baked in the interest rate today. So
mhm,
they have that expectation, and so that's another reason why rates have been coming down is with that expectation in the future.
mhm,
But in addition to that, with the election news, they
mhm,
do expect that if Trump does get reelected, that economic numbers will improve
mhm.
and that mortgage rates will further come down as well.
Okay. So that's what I think, especially during the last Trump regime also, right? What we had noticed, the rates went down, and I think housing really did good during a during a Republic times, right? Like that's what we have noticed in, and re-electing might be a good, but only thing is it might be impacting the affordability wise also, right? Especially in this Bay Area, the affordability been hard for a lot of people. So the rates bringing down, it doesn't mean it is going to be good for the affordability wise also, correct? Because prices might start jumping high.
That's correct. And if interest rates come down, it could also spur more buyers into the market because now they see more affordability with lower payments. So you could have a lot more competition also in the marketplace.
Listeners, you're listening to Real Estate Show from Nagaraj Annaiah, and today I'm talking to April on the different aspects of the mortgage and how it is going to impact on the Bay Area real estate. So we started with the how the rates are going and how the trends. Uh, well, April, we discussed about the forecast for the mortgage interest rate depending on being an Trump's re-election going forward. But with home prices still high, okay, what strategies can buyers employ to increase their affordability and secure a mortgage?
I would say probably 99% of my clients are going with ARM loans.
Mhm,
They know that in the future, interest rates, it's highly thought about that interest rates are going to come down in the future. So almost everyone is doing an ARM loan at this time to take advantage of the lower interest rates for affordability and saving some money on interest.
Okay, but let's touch upon what is ARM because a lot of listeners might be a first time listening to it, right? Like ARM, what is ARM and what how it is different within a 30-year fixed. Still, ARMs are a 30-year loan program, but it's only fixed for certain number of years. Is that correct?
That's correct. So the ARM loans either have a fixed period of 3 years, 5 years, 7 years, or 10 years. Usually the ones that are people are using are 5 or 7 years. It's very secure during that time because it's fixed during that time period. What the anticipation is that you're not going to necessarily have that loan for 30 years. It's
Mhm.
a 30-year amortized loan, but it's based on that fixed period of perhaps 5 or 7 years. So it's very secure during that time.
Okay, so it's a good way to get started instead of, as you said in the initial, right? Like it's a 30-year fixed is 6.675, and ARM rates are 6.25. It's considerably saves around $500 to $800 depending on the mortgage amount. So it is a good choice, as you said. Like always start with an ARM. That's one of the creative way to get started.
That
Correct.
is
And
correct.
I think that is the one more is like, what are the creative down payment options available for the first time home buyers? Because given the high cost of living around here, because there's a lot of buyers they're just waiting for a 20%, and they keep on waiting forever.
And we have down payment programs. Now, the challenges in the Bay Area obviously is the high prices. So with a lot of the really low down payment programs, there are max loan amounts, but we do offer programs with 3.5% down, 5% down. There are first time homebuyer programs available, sometimes for down payment assistance, but those have max loan limits. We also do have 10% down programs on jumbo loans. So that's one of the ones we're seeing a lot of because it allows buyers to get in without that full 20% down payment, which can be challenging with these very high purchase prices.
Okay. Listeners, you're listening to Real Estate Show from Nagaraj, and I'm talking to April on the lot of mortgage options and how the mortgage is trending in the Bay Area. And we were discussing about the affordability and high cost of living and what are the creative down payment options, and we touched upon, as April mentioned, is a 5% minimum. We can start with a 3.5%, right? And 3.5 and 5% is for the confirming loan limits. Is that correct, April, or like?
That's correct. Yeah. So those maximum limits are about 1.1.
Yeah, depending on the counties where you live. It's a Santa
Eh,
Clara counties might be the highest one, and Alameda, Santa Clara and Alameda. But as you go to San Joaquin, it might be like 750, 760. So that confirm
Correct.
vary. So that is a great thing, right? But one always the disadvantage maybe with going with a lower down payment, your monthly payments might be high because again depends on you need to make that difference of 20%. So that's why you divide it into two loan programs or like a PMI option. Is that correct, April?
That's correct. Yeah. We alleviate the PMI by putting it into two different loans.
Mhm.
And it eliminates the PMI, which is not tax deductible.
Okay, that's a great way to get started also, right? Instead of you keep on waiting and the home prices are going up. Maybe it's a great way. Just start with a 10% down. Maybe you're waiting for some stocks to come in, right? Like maybe you're waiting for your ESPP to vest, or maybe you're waiting for an RSC to vest in next 6 months or 8 months, or you're confused. Maybe the stocks like might be increasing. I want to wait for some more time to start stocks to mature, right? Maybe this is a great options for them. Start with a 10% or a 15%.
Agreed, because yeah, the opportunity cost of the other 10%, it may make sense to keep it in the market either for tax reasons or vesting or exactly what you said, increasing in the market.
And good thing is like since you said with a 10%, other 10% is the interest only loan and you can pay off anytime. So that is the beauty of this loan program, right? Like because if you maybe you're waiting for your stocks to vest next year or you want to pay the taxes next year, right? Like maybe that's a great option to start because start with a 10%, pay off the 10% next year.
Correct. Yeah. And there's different loan options that are available for that second mortgage. Some are principal and interest, and some are interest only.
Mhm.
And we have different options for that. But it's a great, once again, the opportunity cost of that 10%, you have to evaluate that.
Yeah. Listeners, you're listening to Real Estate Show from Nagaraj, and I'm talking to April L on the mortgage stuffs, on the Bay Area, how it is going to impact the mortgage. How is the mortgage getting impacted because of the recent tech layoffs, or like, are there any changes in the interest rates? And one important thing, right, like especially in the Bay Area, with a significant number of foreign national buyers in the Bay Area, do we have any unique mortgage challenges they face, and how can they navigate the process?
If as long as you are a legal, excuse me, just getting over a cold.
Mhm,
As long as they are a legal worker in the United States,
mhm,
they have just the same rights to purchase loans. So we have loans that are available that are the same as others.
mhm,
And the one challenge can be is if, for instance, they have a business in another country in which they have foreign tax returns.
mhm,
We had a situation recently with that, and that one can be challenging in the lending world in the United States. But we did have a investor that would take foreign tax returns
mhm.
for that. So we do have different creative options available for some of those
And what
scenarios.
what is the minimum number of years should be they staying in US? Like, can they come to US and they have the valid work visa and they start within 6 months they can get started?
Right away, as long as they are here. And in most of those cases, if they are here, obviously many of them are salaried employees. They're guaranteed a salary. That's not a problem at all. It's very easy for us to qualify them right away.
Are you considering the income of, like, for example, they work for a good tech companies, and a lot of folks are moved from L1 visa. L1 visa is like basically they're working in maybe in India or somewhere in China, and they got moved from China to here or India to here through an L1 visas. For them also, you consider the previous employment history also, right?
Yeah, it depends. It depends on the situation. There's a million different scenarios. But yeah, we do have creative options to potentially use that. Or if now they're maybe making more income, we're going to be using that income, US income, from the job that they just started.
Okay. Listeners, you're listening to the Bay Area Real Estate Show. Myself, Nagarajan, and I'm talking to April L on the mortgage. And so we're discussing about all the mortgage trends and other stuffs. Today, we are not taking any calls, live calls, but if you have any questions, you can reach us out, but we'll be giving out the numbers shortly. And one more important thing, right? Recent, especially because of the high home prices now, right? Like, how are the recent appraisal changes have impacted the mortgage process in the Bay Area? Like, are you seeing any changes in the appraisal stuffs because of the high home prices? Sometimes if we have put an offer so high, appraisal comes short. How do we go about it?
Well, I've been very fortunate of late that I haven't had that problem too much. A while back, I've had that a little bit.
Mhm,
But once again, with the option to do 10% down,
mhm,
if somebody originally was going to be putting down 20%, we can now supplement that difference in the appraisal value in a
mhm.
second mortgage to help supplement that so they wouldn't have to pay any additional down payment.
I think recently we had one challenge. Remember, like I think we appraisal came out close to 50K, 60K. Like, so I think that time the creative loan programs, what you have, like 10% or 15%, help them out. But listeners, like if you're putting an offer, always talk to the realtor, understand how much difference you are expecting to come in, because a lot of offers what we put in April, like 99% or a 95%, I can tell you, is with a zero contingencies. That is like no loan contingency, no appraisal contingency, no inspection contingency, because you're competing with so many buyers out there. So you need to create kind of a unique kind of an RPA or purchase agreement. What you put in should be standing out. Otherwise, your offers even getting accepted is so challenging now.
That is correct. Well, and also if you talk about those contingency plans, sometimes buyers uh, are afraid to go in with that. And we can look at the contingency plans that the what if there are any issues, we can really help protect the buyer with making that particular offer.
Yeah, and I think, see, one more thing is like appraisal can be rushed also, right? Sometimes you go with a short appraisal because sometimes the sellers are asking for a high price. And I think recently we had with one client who did within a 7 days appraisal contingency because seller was saying that no, no, I need this price itself. Okay, and buyers also was like wanted this property to make the smooth transaction. What we did is like just put a 6 days short, very short appraisal contingency loan period appraisal, so that way if the appraisal comes out, the seller can also be see what is the real worth of the property, and the buyer can also come to know, yeah, I think not a bad deal because he also in the basically doesn't have much numbers to play around. That might be a great thing, right?
Yeah, and actually we just did that recently, and that was over the 4th of July and a holiday weekend. So I think we really had 2 business days to get that, and we were able to get that appraisal very quickly. So
Thank you for that, helping me out. I think you were just so quick. I think I was always pushing you, April, I need this as soon as possible. But thank you for the helping me out to get it back.
well, I pushed them as well. So
I think we got the appraisal on the same day. I think we ordered it one day before and we got it on the next evening. And buyers also was happy, sellers also was happy at the end of the day. And luckily that buyer got 10,000 more than what we offered in. So which is really good.
yes, yes.
And one listeners, you're listening to Real Estate Show, myself Nagaraj Annaiya, and we are talking to April Lyle, and we are discussing about the Bay Area real estate, and we are talking about the mortgage trends. One lot of, I think what I've seen is from last 1 year, a lot of people have bought a house. But more important question they're asking me is when is the right time to do a refinancing? I mean, when does it make a sense to do refinancing on existing mortgage rates?
Well, the thing is, we're kind of uh, we're going to find ourselves probably back in the times of the early 2000s. And really, as long as the you're going to be saving enough money and the break even point is kind of at a short time, then it's going to make sense for you to refinance.
Mhm,
And if you do it, and the rates drop further, you can do it again. So as long as, a lot of times 0.5% might make sense, 0.75%, somewhere in that range.
mhm.
But we can look at those options to see, but you're not stuck in that loan in the future. If rates come down again, you can refinance again. So as long as it's making sense for your family and it's saving you money, then it's a good time to refinance.
I think they should be considering what is the current right now. The current rates are 6.25 for a 5.5 arm. So if they had bought a house, what 6.75 or a 6.825, for them it makes a sense.
Yeah,
But
in a lot of cases, that could make save them a lot of money in the future. So yeah, that can make sense, absolutely.
that as I said, one example, good thing is like 0.5%, it reduces a 500 or a $600. Instead of you keep on waiting to reduce it to 5.25, we don't know. We are saying that mortgage rates might drop. We don't know in the next start of the 2020. Nobody can't predict. Nobody can't predict in 2025. We just discuss based on the scenarios. We are when in the start of the show, I just said Trump re-election, that is again based on the current trends, but we don't know what holds in the 2025. So if you keep on waiting to decrease to 5.25, we don't know. But better if you think it's even a $500 makes a difference for you today, and you're paying a zero cost. A lot of the times people say, a lot of the lenders give it for a zero cost. Correct, April. I.
Yeah, and there are those available, but I don't always recommend those options because typically closing costs on a jumbo loan, is going to be somewhere around 3,500 to maybe 4,000.
Mhm.
But what happens, how they offer that zero cost is they raise the rate.
Correct.
Well, the savings between that, if you just pay for the closing costs, typically those are going to break even super quickly. So I'm not a huge fan of the no cost option.
Mhm.
You don't have to pay points, but I would pay for in most cases, I would pay for the closing costs, and that's going to break even super quickly and then save you even more interest on
Okay.
your loan in the
I think
future.
it's simple math. For me, it's just simple math, right? Like, for example, yeah, I'm going to hold on to this loan, whatever refinance, for a 6 months or in a 1 year. Okay. And I'm going to pay a $5,000, sorry, $500 every month. For a 6 months to recover, it is like you need to pay $3,000. But if you can get it for a 6.3750 cost, that's why talk to the lender, try to understand, or if working with me, right, April, a lot of clients, even after 2 years, 3 years of the purchase, they call me and they ask me what is the best thing to do. Talk to the expert. Maybe they can help you out on that. Maybe talking to experts like you, or like you're talking to me, what best fits for them, so that so they can make a decision on themselves, right?
Absolutely. And also on that note, when you were saying that about in the future, not knowing where interest rates are going to go,
Mhm.
I find that those that try to target the lowest point usually miss the mark. By the time that they think, oh, the lowest rates might go back up again, maybe the rates never get there. So sometimes it's a missed opportunity by not taking advantage of what's in the market now
Mhm.
because we don't know what the future holds.
Yeah, nobody knows the nobody knows the future for sure. And I think one last question to you, right? Like, see, there's a lot of buyers out there. They get into a contract. They keep on shopping once the offer gets accepted. They might talk to 10 lenders and 15 lenders, and they try to pull the credit from each 10 lenders. Is it going to impact the credit score? And if there's a difference of a 0.125, but is a worth of but is not, we don't know that new lender is going to close it, will you take the chance?
I personally wouldn't. Interest rates are one factor.
Mhm.
However, service, knowing that your lender is going to get things done, that you're going to have a good process, that you're going to have things explained to you. Not all lenders and loan officers are created equal, and there's many that won't answer your questions. You can't get them on the phone. It really is important to choose a lender that you trust, that you know is going to do a good job for you. That actually is one of the most important factors of the process.
Thank you so much, April. We're running out of the time. Listeners, if wants to talk to April, how can they reach out to you?
Best phone number for me is 949-306-8100.
Okay. Listeners, if you want to reach out to me, go to the nagrajhomes.com, click on a WhatsApp icon, and you can always reach out to me. Any questions in the Bay Area real estate, encourage. It's a free consultation. You can always call me or text me. Thank you so much for listening to it. Have a wonderful day.
Thank you.
Thank you.